that the dynamics in the banking system are changing a little bit. If you have a little patience, you may be able to get some. But Mr. Gwadabe, I want to hear your thoughts about, first of all, the dynamics you are seeing from the central bank in terms of its policies and how you think it's going to impact the supply or demand for foreign exchange. Let's start with that. Let me hear your thoughts on that.
Good afternoon, Mr. Wale, and thank you for recognizing us on this important platform where the issue of Naira 2021 is being discussed. It is a very serious concern for us because we are a major critical stakeholder in the foreign exchange market. So that's why we deem it fit, and thank you for giving us a room to talk on the perspective and then the issues as it is, being the retail, the critical retail end users. So the Naira has been facing a war of attrition, not even a war of crisis, since the beginning of 1986, where we introduced the structural adjustment program, where we also come with a whole Dutch auction system, retail Dutch auction system, single exchange rate, and till now closing the multiplicity of exchange rate in the market. The CBN have over time recently introduced measures to ensure that there is discipline. What we normally have in terms of this volatility, for me, is indiscipline. There's a lot of indiscipline right in all the sectors of the economy, which you are all aware. What is happening is sabotage. There is a lot of sabotage in terms of even supply sources. So it's good. The CBN is coming out with measures, like I said, to address these inadequacies. Not long ago, we have seen where the CBN addressed the issue of third-party invoicing. That's a window that has really been used to ensure that there is abuse in the foreign exchange market. Secondly, last year, we have seen just by December, where they came with a drastic measures to move from Naira payment of diaspora remittances to dollar payment. It is really saddening to even hear from other speakers now that the foreign exchange inflow we're all expecting is not going to likely to come. So the CBN have been proactive in ensuring that they have moved their paradigm shift from demand measures to supply measures. So this is a good move in ensuring the inflows are coming. So
do you think we're going to see the flows?
Nah, yeah, this is a very good move. Don't forget, Egypt, their valuation, despite COVID, is about 16% disparity. Ghana here, they are not having about 29, 26, 30% like we're seeing between the official and the parallel market. So the fixed exchange rate is really giving opportunities for people to always divert the official window to take these inflows into the market. Most of these inflows doesn't even come. They are traded in America, in UK. The Naira payment was done here. They are more like dry transactions. The dollars does not come in. We find situation whereby people are even saying you don't have inflows. Take, for instance, deposit now into DOM accounts. Cash deposits have become a very, very difficult thing in the banking industry. And yet, the operators are saying they don't have dollar to pay beneficiaries of diaspora remittance. And yes, it's good to look into foreign capital. But my worry is we always subsidize these foreign inflows because $50 billion can come into this country, coupled with illicit financial transactions. You find that about $100 billion want to leave, want to exist. So it's subsidization of even the direct inflow that we're all talking about. I like Mr. Kintola, who expressed hope on our local investors to invest. For me, any inflow that is coming, it should be attached, should be matched with an export. Come with your inflow, but when you are going, we're not going to pay you cash. You take our export goods and go to your country and sell it. So we need to begin to put some decisions like this that we bring capital growth and investment We heard of China wall. Yes, it's difficult, but it's mindset. If we all agree to do it, it's mindset.
Right.
It's the position of our mindset. And I think that will go a long way to help the future of Naira in 2021.
Okay, I hear you offering some unorthodox policy moves, suggestions there, but we'll see. Okay, Mr. Yusuf, I'd like to hear from you. If you can switch on your camera, please. You are the DG of the LCCI, and obviously you get a feel of what industry are going through right now. No doubt last year was a tough year with the devaluation and even the shortage of Forex. Do you get the sense things have improved? And I also like you to speak to your thoughts on forex related business activity. So in other words, I'm talking about imports. Do you get the sense that demand for things from China and so forth, given all that has happened across the world, is likely to decline a little bit? How do you see businesses navigating 2021 and your thoughts on the currency?
Yeah, thank you very much, Wole, for this opportunity. Two major challenges we face in the business community as far as the currency is concerned. The first is the issue of the depreciation of the currency. You know how import dependent the economy is, ranging from manufacturing to services to the consumer sector and all of that. We are highly import dependent. So anytime we experience a sharp depreciation in the currency, it causes a lot of dislocations in the system. It spikes the cost of production, cost of operation. And when you are in a market where purchasing power is also weak, you have to transfer all these costs, and it affects business margins. It affects sustainability of businesses and so on. So that's a major shock that the businesses have faced. But it's inevitable anyway, because we don't have much control over what the currency in terms of international pricing is. The second major shock, which is perhaps even more important, is the liquidity crisis in the foreign exchange market. You know, when you have a situation where you make a demand for Forex, either to import equipment or to import raw materials, and you are getting maybe 10%, 20% of what you have requested for, what are you going to do with that? So it's a major, major problem. I've seen people, even corporates and all of that, that are seeking to import very important components for their businesses. Sometimes they don't even mind the cost, but they can't get it because of the liquidity crisis in the foreign exchange market. So that is creating a lot of problems. It's creating a lot of uncertainty in the economy for investors. It's even escalating the risk of investment. Because when you are not sure when, how, at what rate you are going to get your FX, this is a major problem for planning. So that is not a particularly good thing. For importers, these are some of the things that they have been facing. And all of these activities have been driving quite a number of businesses, even to the informal sector. Because in the informal economy, all sorts of funny things are happening. You know, and that is one thing about the informal sector. This economy has close to 50% of its operations in the informal sector. And in the informal sector, the operators have a way of getting around any policy that is not right. They are so ingenious, they are so innovative. Once there is a policy that is not, you know, very, very, very sustainable, they have a way of getting around it. So we need to normalize the situation so that you can have more transactions on the table. Right now, we have a lot of transactions under the table. You have an exchange rate, they say, okay, this is the rate. You pay a particular rate officially, you pay another rate unofficially to some, you know, these things are creating a whole lot of problems in the economy. And another concern, which I have personally, is the excessive focus on the demand management side of the foreign exchange market. You had these 43 items or whatever number of items We have the third-party rule that was imposed. We have import bans. We have all sorts of things trying to manage demand. Whereas there is no clear strategy on how to encourage more supply to come into the system. Now, I'll give you an example of what exporters went through in the last 3 months or so. There is this form they call the NXP form. That is the non-exports form. Now, the policy is that if you get your export proceeds, it will be converted at around maybe 380, 386. And because of that, a lot of exporters were trying to, sideline the NXP. And will you blame them when they know that the official rate is sometimes close to 450? At the time, it was close to 470, 480. And you have a policy that says that the export proceeds will be exchanged at 386.
Right.
So it created a major problem of compliance. And you know what it is when there are compliance issues? The CBN was chasing them. The shipping companies were brought in. There are all sorts of circulars, intimidation, and all of that. And there's a limit to what you can do if your pricing is not right. How many fires are the CBN going to fight?
So if I can just,
we need to normalize these things. Yeah.
Yeah, Mr. Yusuf, if I can just be more specific on this question about behavior, how do you see manufacturers, how did you see the demand for foreign exchange changing in 2021 compared to 2020? There's always been this talk about pent-up demand. So, for example, do you think that we still have a similar scenario as we had in 2016, 2017? Or do you get the sense that maybe locals are adapting, and even given what is happening globally in terms of the impact of the outbreak of the virus on supply chains, do you think anything is going to change there?
Well, not significantly. If anything will change, because the economy itself is contracting.
And that's even another point. I thought that could even impact demand too.
Yeah, the scale of production, the demand, the turnover is also reducing. So to that extent, there will be an impact on the demand for foreign exchange. But right. the issue is that when you have a situation where you are in a business where you have very high fixed costs, like in manufacturing, you can't switch easily the way the man who's in financial markets will switch. So the manufacturers are stuck with the businesses that they are doing. And unfortunately, we have a manufacturing sector that is also too import dependent.
Right.
So they are not even able to take advantage of the weak currency that we have. That is another issue with our industrial policy, which is another very fundamental issue. If you look at the foreign exchange market demand figures, the demand by manufacturers as high as the demand for those who are importing finished goods.
Right.
Which ordinarily should not be the case.
Okay. Thank you, sir. Charles, I'm coming to you, and if you can be very brief on this point, because I also want to hear Bite Oduneye from EGM speaking after this, and we are running a little behind schedule here. But I would like Bite to speak to the foreign markets and the dynamics there in terms of how Nigerians, for example, can get access to those markets. And the reason I say so is because I think that it's a new day right now. Diversification it's no longer local, it's now global. And with what we've seen with fintechs, as Biola was mentioned, you're not really restricted in terms of where you can invest. But so I wanted to hear from you, Charles, about your general thoughts on the outlook for the markets globally, because I imagine that some of those markets will be the destination of a lot of local capital here.
Well, what we did flag this back in May, that we thought Trump was going to lose because US presidents always lose when there's a recession in their election year, and that we would see this shift in the dollar going weaker, and that would lead to this flow of cash. And for most countries, sadly, Nigeria's not getting a share of this, but for most countries, that makes emerging markets very attractive, because if their currencies are getting stronger against the dollar, their foreign debt starts to look smaller as a percentage of GDP. So their debt ratios look better. So their credit ratings go up. which then makes the countries look more attractive. So you buy into a story of a weaker dollar and stronger emerging market currencies, and it creates a a fueling mechanism, which creates bull runs that can last 5 or 10 years. The difficulty for foreign investors, and Dele's pointed this out very well, was that if you have been through the process where you can't get your money out of Nigeria in 2015 or 16 or 17, and again, you now can't get your money out easily in 2020, then as a fund manager, you are in serious danger, at least serious danger, of breaching your fiduciary duty, which is your duty to your clients,
right,
to be able to give them back their money if they need it tomorrow. Now, if you can't
right,
get it out of Nigeria, you can't do that, which then makes it very difficult to invest. So as Dele said, it's very hard to see, unless oil prices go to $100, $150, it's very hard to see what would trigger foreign investors to come back, to have trust in Nigeria's FX regime, that they can come back. So it's going to be down to what
mentioned the weaker
Nigerians
dollar,
do.
but I was just going to, if you can just quickly speak to this. You mentioned the weaker dollar, but what I would really like to hear more about is the outlook for those markets. So the developed markets in Europe and the US. Do you see growth in the equities markets, for example? We already know that yields are so low. Fixed income is perhaps not the place Nigerian investors will be looking to invest, of course, unless they think that we're going to have a weaker local currency. But your thoughts on that?
Well, you can't even rule out fixed income. US yields have gone up by 25 basis points, 0.25% just in the last few days. So at that rate, you'll be getting, what, 5% yields in America by the end of the month. I mean, it won't carry on like this, but fixed income, if the yields go up enough, they could become interesting again. It's just that I'm an emerging markets guy. I love countries like Nigeria, so I have got a bias to saying that if the interest rate and if the value is there, which it is, if the growth is going to be better, why would you put your money into most American stocks? Agreed, the tech story can be different, or maybe a Tesla can be different. You've got a technological radical change there, which is encouraging people into those sectors. But even on that, on tech, I think the Democrats and the Republicans are going to be going against tech now. And I think the big trade of the last 10 years, which is just put your money into Apple and forget it because it'll do great, that is going to come under more pressure. You're going to see legal action against the tech companies. And again, then it says, well, if that avenue of investor returns is getting limited in some way, where can you go to get yield? Maybe it's South African local currency bonds. Maybe it's Kenyan equities. Maybe it's Ghana, where the dollar bonds are offering a nice, nearly 8% or so in dollars. I mean, this is good returns for investors. Bit risky, but good returns. But that's what I think we'll see.
All right. Let me invite Bitel now to chime in here. Bitel Dunia is the founder of Eagle Global Markets, and thankfully they are one of our sponsors today. Bitel, you obviously provide that access, that platform for local investors here to look into other assets offshore. So you've been listening to the conversation up to this point. Maybe you can speak to your thoughts on investing internationally, and then perhaps maybe speak briefly to what solutions you have there at EGM.
Well, thank you very much for having me, Wale. It's a fantastic topic that we've been brought in to sponsor, and it's an absolute privilege to hear from such fantastic minds. Nice to see Charles and a number of fantastic speakers. It's been a minute, Charles. Lovely to see you. Well, I will first start with, we can tell from what Mr. Mood has mentioned. You can tell from his tone and his facial expressions, the pain that a number of businesses are going through in Nigeria, right? We can tell that this issue is a serious problem. We heard from Mr. Akinbamidele when he mentioned that it doesn't seem as if any new capital flowed into the market. And as Charles emphasized, and I hear this from a number of my my financial services colleagues, no matter how desirable a return is, if you cannot get access to the great returns which you've made, it means nothing. To further add to that, we're not the only interesting opportunity on the African continent, meaning that there are a number of other opportunities. So it's imperative, very, very important that we sort out our foreign exchange issues. It is driving away capital. It is destroying businesses within the country. So it's something that we really should be spending a lot of time and paying a lot of attention to. It's not something that I'm not saying that our actual geniuses are not taking it seriously, but it is. I think it's imperative we spend a lot of time, because all the great work that is being done can be destroyed with the way our foreign exchange is. Now, at Eagle Global Markets, and funny enough, when we came to set up, we set up in 2016. At the time when we set up, it was 180 naira to a dollar. When we set up the company, as of today, it's about 460. Now, how have we managed? I couldn't say. It has been very interesting. Now, what do? We enable our clients trade global markets, right? We provide them the opportunity using with accessibility, trading indices, forex, commodities, and equities in real time on our mobile platforms. We're a multi-asset derivative platform, meaning that our clients can go long and they can go short, meaning that they can make money in a rising market and a falling market. But one of the things that has done really well for us when we came in 2016 is that we set up with a Naira platform. So we've got two platforms. We've got a MT4 US dollar platform where clients can take long and short positions in over 1,000 financial instruments using US dollar. And then we had the innovative cloud trade platform, which is a Naira-based platform. It's won a number of Business Day awards. What this does is that it enables our clients to take advantage of price movements using Naira. So our clients over the last 4 years, you could go long or short on any index, any global index, the Dow Jones, the FTSE, the DAX, you name it, any equity, any commodity. We have our clients that could trade oil on anything using our local currency, right? So there's no swap. I mean, we take that hit as a company with our LPs and our liquidity providers, because like I said, the Nigerian economy, or the amount of people that trade global markets in Nigeria, and this would surprise you, well, they have been screaming this for many, many years. More people trade global markets in Nigeria than trade the Nigerian Stock Exchange. I don't understand how this happened and nobody else sort of like noticed. We have about 13 European brokers. I think we're the only African brokers that provide this service. And this has been happening for the last 15 years, right? So there's a lot of interest. So what we did is when we came in 2016, we saw that for most of our clients, that most people in Nigeria that trade, they trade on the MT4 platform, meaning they have to convert their monies to US dollars to be able to take positions in dollars. Right. Which is why we launched what we call the cloud trade platform. And we also have another one which is launching later on in the quarter, which is the Eagle Trade platform. What this does is it enables people to take positions in their local currency. And we did a very similar thing back in 2015 in Ghana with the same thing, enable them to trade global markets with their local CD currency. What that does is that it enables people to take advantage of global opportunities, right, without having to go and source dollar. It doesn't change the fact that there's still a problem with the dollar, but that's a problem that we solve as a company. But we just make it very, very easy to enable Nigerians, as we expand across the African continent, enable people get access to global markets using their local currency rather than reducing the demand for the US dollar.
Well, thank you very much. I mean, that's news that I'm sure all our attendees can use as they look to diversify, as I mentioned, across the world. Thank you so much, Bite. I want to come back to Mr. Rewani now, and let's talk local assets now. So we're obviously not going to put all our money offshore. We are going to invest here. So given the dynamics that you're anticipating for the currency in terms of the exchange rate, I want to hear your thoughts about how it's going to impact local asset prices and so that we can get some information we can use into how we navigate this year. Sorry, you're still muted. Apologies, we can't hear you.
I think it's important to note that the move towards currency convertibility is irreversible. First of all, current account, then before capital account. So, and this will take a number of years, but that move has started. And that starts, and then secondly, you need to have the interest rate inflation differential almost equal across markets. These distortions are what people are trading and taking advantage of. But definitely, because of the African Continental Free Trade Agreement and compliance with the ECOWAS protocols, the Nigerian manufacturer, the Nigerian farmer, the Nigerian financial services provider will have to be cost competitive and also has to be quality and service competitive. So that changes the entire mentality of the Nigerian producers. I think that what you are going to see is that people are going to be buying assets in Naira as long as the value and the price of that asset is competitive with assets elsewhere in this country. I think that you are going to see a situation where I ask myself that if I want to buy real estate, for example, residential real estate is usually priced at 14 times the annual rent. And so today, you would see real estate, replacement cost of real estate is higher than the market value. Then you will also see that certain changes that will take place in 2021. For example, the commencement of the Lagos-Ibadan rail and the extension therefore will have an impact in real estate values and also where people are going to site their manufacturing capabilities in this country. So let me give you an example. The Ilupeju and Ikeja industrial estates are located in the heart of Lagos mainland. And so people move, say you work in Nestle and you work in Cadbury or Guinness or somewhere. You live in the GRA of Ikeja and you pay 5 million naira rent for a property. And then it takes you 1.5 hours or 1 hour to go from GRA Isaac John all the way to Oba Akran Avenue. Now, from January from next month, you can stay in Papalanto or somewhere in Abeokuta and get to Oba Akran in 30 minutes. So, and you will pay for a property in Papalanto for 100,000 naira. So immediately it changes the pricing formula and the value of properties in Ikeja GRA relative to Oba Akran. And then people pay for the right of way. So all of these things begin to change the thing. Then you begin to talk about cross-border trade. Look at what has happened now. The import duty on cars, commercial vehicles and levy have been brought down to from 30% to 5%. What does that do for the price of new cars? What does that do for the price of the depreciation rate for cars? So all of these things will affect the profitability and free cash flow of companies, but also affect the value of assets. And you will see that Nigerians in the market, both for real estate, both for equity prices, and indirectly, the exchange rate begin to be, all of these efficiencies begin to be priced in, and you begin to see the value there. That is why, one, the true value, the fair value of the currency, the speculative and risk premium that is put on it because of inconsistency in policy, and eventually, as you head towards convertibility, all of those things begin to come to an equilibrium. I want to end up with one comment that Aminu Gwadabe said that people, when they're taking money out of the country, they should tie it to specific exports. While I agree with that, maybe, but you should tell people when they are bringing their money into the country that if you are bringing your money into this country, when you want to go out, you will also tie it to something. And in that case, you'll see that instead of getting $100 million in, you'll be lucky to get $1 million in. Thank you.
Thank you. Thank you very much. So food for thought there, Mr. Guadabi. Okay, I want to bring in, because we're talking about assets now, the acting CEO of Cordros Asset Management is also joining us here, Bolawa Aino. And I wanted him to chime in on this conversation and maybe asking the same question about his thoughts on asset values and potentially, how we should be navigating this year as investors. So Bola, it's over to you. If you can just adjust your camera shot a little bit, it's tilted down a bit. Yes. Okay, go ahead, please.
Thank you, Wale, for having me. Thank you, arbiters, and of course, the fantastic panelists. So with what we see with our investors, just like Biola said, a lot of them have been looking at diversifying their investments. A lot of them that used to have 100% in Naira assets want to have currency diversification. And because of the trend they've seen over time, the person that spoke from EGM mentioned that when they came, the Naira was about 100 plus. Of course, you know what Naira is today. So a lot of investors have been asking, how do I diversify my investment? How do I hedge against inflation? How do I hedge against currency? So that's really been the prevalent word that we've seen. 2 years ago, we launched a fund, a mutual fund, and it was a dollar mutual fund. And the fund was grossly oversubscribed. And with what we see in similar funds, that wasn't the case. But with the dollar fund, it was an easy sell. And because that was a theme in the environment then. So a lot of investors are looking, how do I diversify my investment? And really, that was why we came out with that dollar fund. We've seen a lot of participation in the Eurobond space as well. So apart from investors doing mutual funds, we see a lot of investors participating in Eurobonds as well. Last year, FBN came out with their Eurobond. When it came out, it was about 8.6%. Currently, it's just about 5%. So a lot of people are also making gains from trading Eurobonds. And really, that seems to be the narrative at the moment. Just to talk a bit about our mutual fund, really, which is to cater for the retail investors and HNI. From what has been said, I know there's a lot of fear factor. Does that mean that Naira is going to be devalued? I know from a lot of conversation that was said today, inflation is going to be on the uptrend. There needs to be a devaluation more or less. And I guess people are wondering, am I helpless? But really, you're not helpless. If you have dollar liabilities, what I recommend is that you also have dollar assets to be able to back up your dollar liabilities. So we came out with a mutual fund, which is really to also cater for retail investors. And we usually say that our investment is democracy of investment. So really anybody can invest in it. So for the dollar mutual fund, it's just $500. And that means you don't really have to have a lot of money. Because for you to trade Eurobond, you need $200,000. Not many people can afford $200,000. But with the dollar mutual fund, it's quite affordable. So it's $500 you can enjoy returns in dollars. I think last year as well, we noticed that the dollar assets were pretty much more attractive than local assets. So last year, Eurobonds were trading as close to double digits, 9%, 8%. And it was really a no-brainer. 1 year Treasury bill was close to 1%. So it made sense to be in an asset that was more or less like a safe haven and can also have that currency edge. And I think that's what the dollar mutual fund has for a lot of investors. So it gives you that inflation edge, gives you that currency edge. And of course, it's simple, it's not difficult. Not too many people can be able to trade derivatives, but mutual funds are simplistic. And so what we advocate is if you have dollar liabilities, I think it's also very good to have some of your investments in dollar assets. But of course, if your investment are your liabilities are in Naira, of course, we don't advocate that you put all your investment in dollar. You need to be able to match your risk with your assets. So that's our dollar mutual fund for you. Quite simple, just $400. Gives you inflation edge, currency edge. It's quite simple, it's affordable, and it's professionally managed. So you're sure that the SEC is watching the mutual fund. And of course, we also do trades for Eurobonds as well, for institutions and for clients. So if you're interested in either trading Eurobonds, you can also knock at our doors.
Thank you very much for that insight. And of course, more food for thought for our attendees in terms of your options as you try to invest and navigate 2021. Okay, so I would like to now move on to the audience. We have quite a few questions that have come through, and I would like to now just begin to pose those questions to our speakers. Hopefully we can get through most of these, but I want to begin by starting with the one that I think everyone can benefit from the most. Adebayo Okunlola is asking, what are your predictions for foreign exchange in 2021? I imagine they are looking at the exchange rate. Maybe I'll just allow Bismarck and Charles to just reiterate their thoughts on that very quickly if you can, so we can get through some questions. Bismarck, you first. What will be the exchange rate?
Official exchange rate, we think, will end at about 420 in 2021. The
Right.
power market will end somewhere at about 470.
Okay, not too much. I'll probably ask Mr. Gwadabi as well, but Charles, you go first. Charlie, what are your thoughts?
Yvonne Mahango is the lady responsible for all our forecasts on Nigeria, and she's looking for 429, 429 for the end of the year. If it was 420, wouldn't surprise me. A lot depends on the oil price. So our number of 429 assumes about $50 average oil.
Mr. Gwadabe, what do you think? Because you seem to be quite confident that the central bank's policies will work. What do you think?
Yes, I quite agree with my mentor, Dr. Wani, and also to just add that, yes, we have seen some adjustment even in the IE window from 395 to about 410. So we should be looking at the official rate closing between 410 and 420. Of course, cost of speculation will also be added, which will make the Naira to go as high as 450 before the end of the year.
All right. You can speak to this very quickly. I think someone likes to hear more about ETFs and how they can get invested in that. Very quickly, if you can, Biola.
So the ETF opportunities are for now really restricted to HNIs. It's not available across a lot of firms. So maybe a challenge for a product for Codros to sort of work on and see how people can get invested in it. But pretty much at this point for a lot of HNI, there could be some other platforms where they can get involved in it. So maybe BITE, I don't know if BITE has something like that on their platform where investors can absolutely dip their toes in. But the one that I'm aware of is for HNIs.
Okay.
Yeah, I would love to. Yes, you can. As we speak, you can invest in all sorts of ETFs on any of our platforms, either using Naira or US dollars. But I must stress that at the moment, that would be trading as a derivative product with leverage. And we're currently working on some regulation, and we expect before the end of the quarter to have got a stockbroking license. So we'll be able to really go to town with the amount of innovative products that will be available to the Nigerian public to be able to diversify.
All right. Okay, thank you very much for that, Bite. Okay, let's move on to a question for Dele. With the recent, the question is from Ayodeji Ebo. Ayodeji, it's good to see you here. With the recent dominance of domestic investors in the Nigerian equities market, do you foresee any major volatility in the near term? So he wants your short-term view on the market in terms of where to head. And then also with the expectation of an increase in fixed income rates by the second half of 2021, should we expect a major reversal in equities? So your thoughts?
Thanks, Wally, and thanks.
So we can get to other questions.
Okay. So I feel that in the near term, which I think is within the first quarter and second quarter of this year, is that the market will still be net bid. I spoke earlier about how PFAs are still largely underinvested in equities, at least from an exposure perspective. The question is, are they willing to push the dial further? So as an example, a PFA cannot invest more than 5% in any company. So one PFA. So, a lot of these guys are buying the same things. They're buying the GTBs, Zenith. At some point, you would hit that maximum cap. So the question is, are you willing to go down, the ladder of quality, to sort of tier 2 or, tier 3 names? I think the answer is no. But I feel like where it's possible, they would probably add on. So I still feel like markets will still either be supported at the levels that it is, and I feel there's propensity for the markets to tick up. What was the second part of that question? I think I need to...
Okay. I think you've pretty much covered it. The point on fixed income, fixed income yields being higher in the second half of the year. Do you think that would?
I am willing to place a bet. I don't think fixed income yields will go up in the second half of the year. For the government, if you are able to borrow at the levels that they are currently borrowing, I think the propensity is to
keep the fiscal and the monetary policy to keep things at the level that they are right now. I think the world is coming to a place where interest rates will be less than inflation. And if you look at, there's been massive, there's a massive growth in debt. We talked about the weaker dollar. I just don't see, and clearly in the kind of markets that we are in, savings is very low. If you compare what we're saving compared to Asia, I think that interest rates will be lower than inflation. So I'm happy to put a bet that I don't think interest rates will go up significantly in the second half of the year. In which case, and just given the amount of liquidity, I think people will.
All right, Mr. Iwani, I have a question for you. At least I want to give this to you. I think it's a very interesting question posed by an anonymous attendee. He's asking, when and how are we going to get our policies right in Nigeria? All right, so maybe you want to speak to that. I think there is another question. Maybe you can. Okay, please go ahead with this one if I find it out.
Two things. One is that I like to join issues with Dele that it's not whether interest rates are higher than the rate of inflation, but by how high. If you are at 15, 16 and your inflation rate is at 16 and your interest rates are 1, there's a big difference between when your inflation rate is 2 and your interest rates are 1, right? So the differential, right, actually depresses growth. There's no way that the country today can continue borrowing 11 trillion naira from CRR and TSA and not expect it will be devastating to growth. You will not get anything near 1%, and there's no way you can grow if there's no national savings growth and as well as investment growth. It's as simple as that. You continue to, model at the bottom of the ladder, and you get nowhere, and that is not acceptable, at least from the policy making perspective. Now, to answer the other question as to when we will get our policies right, I think it's not a silver bullet. You have to look at the trend of policy making. 6 years ago, the question of discussing about refineries being privatized, the question of subsidy removed, the question of having exchange rate for monetizing our foreign assets to the government at 380 or something was not even on the table. It was not even allowed to be discussed. Today, that is not only being discussed, all that the government is saying is that please reduce the amount of shocks that this will take about. So I think cumulatively, we are seeing policy changes taking place, not as fast as we want to see it, not where we want to see it. There are still a lot of dumb things that are being done, and we have to stop doing those dumb things, right? But at the same time, we must recognize that certain things are happening. But the point is that the world cannot wait. Charles' presentation about population growth and fertility rates being inversely related to performance of the economy cannot be lost. So basically, what we are saying that one is to get a policy, and one of those policies means that you must grow faster than population rate, or else you also control population. And that productivity, total factor productivity, which is the efficient use of your capital stock, is not being addressed. Total factor productivity is still -6% as we speak. And you cannot grow if your total factor productivity is negative. That is the truth. Thank you.
All right, but Charles, and if you can be very quick here, because I want to begin to wrap this up. I wanted to hear your thoughts on this Nigeria debt to GDP conversation. Now, very often we hear that it's not a big deal in terms of our ratios compared to the rest of the world, but many people have pointed to our debt servicing compared to our revenues as the big sticky point. But I'm beginning to think that we need to pay attention to those debt to GDP ratios, that debt to GDP ratio a little more, and more so if we see a spike, which I imagine we would at some point in interest rates. The burden of servicing that debt is going to be incredible, and we're seeing that the government is still struggling to increase its revenues. I mean, bottom line, I want to get your thoughts on how concerned are you about, if I can use the word, the solvency of the Nigerian economy. I'm a bit concerned.
Short term, I'm not worried. If the government can borrow at negative interest rates as they can right now, it's a fantastic position to be in. And the yields on foreign debt have been coming down as well. So short term, 1-2 years, I'm not too concerned. What bothers me is the longer term about governments saying, why are our interest rates so high? They're being manipulated lower today in Nigeria, but fundamentally they would be quite a lot higher than this. And the misattribution of that. So in Kenya, they blamed the foreign banks. In Zambia, they blamed the foreign mining companies. Actually, not just the foreign banks in Kenya, the local banks are blamed in Kenya as well. So, and governments then put in place policies that are not great because they are, I feel, sometimes missing the underlying problem. What really matters is that the little money the government's got, that it spends as well as it can on investment. And I think the local rail lines around Lagos, perfect. Exactly what Bismarck was saying about rolling out the potential to have manufacturing, increase the wealth of asset prices, of housing along those railway lines. What bothers me more is when I read this morning that there's going to be a $2 billion rail line from Kano to Niger. Niger, not the country, not the state. And that bothers me because I can't see that investment making money. And already countries like Ethiopia and Kenya have discovered that building railways to the coast to help with exports, even they're not making money yet. And the idea that you build a $2 billion railway to Niger is, there's good spending and there's bad spending, and that looks problematic to me. So it's very important that the government uses the small amount of cash it has to invest as wisely as it possibly can to help the growth story, and not do it on projects that appeal for political reasons, perhaps in the north, but not economic reasons. That's the concern.
All right. Okay, we've really overrun, but we still have many questions. So I'm going to really appeal to our panelists to be really, really tight in answering some of them. I want to take a few more before we round up. Okay, so Dakpo Olowo is asking, and he's asking for a clear answer. I think I'll pose this one to Dele. What are the factors we should look at before deciding on the stocks to invest in this year? Now, I mean, that may be a very open-ended question, but any thoughts, Dele?
I mean, there are a few things
very quickly.
I look at companies with high corporate governance. I think that's very important in the environment that we operate in. I think liquidity is equally important. So buying a stock that you can get in and out of. I think in an environment where we have very low interest rates, I think you should be looking out for dividend yield. That should drive whether or not you should be buying a stock. So at least try and target dividend yields of sort of 5 to 7%, not of 5% in this current environment. I think those sort of three things are where corporate governance is very important for me: liquidity and I think yield. Three things that I would look out for.
Okay, thank you very much, Biola. If you can just chime in on this one. Barbara Barungi is asking, why has it been difficult to deepen and broaden the asset classes in Nigeria? Another very open-ended question, but any thoughts on that?
I think there are a couple of issues around that. So I can't speak to the asset classes in general. I would say, let me rephrase it by saying, why is it hard to democratize, asset classes in Nigeria? And I think that a lot of the participants in the industry have done quite a good job of democratizing it. It's also, they've made it more accessible to people that do not have as much capital to get involved. And you heard what Kodros said about, reducing some of their entry points for their products. And I think that has made it a lot more accessible. In terms of product growth, I think product growth is a function of, the level of awareness of investors, and as investors have become more aware about opportunities for investment, we have seen quite a few different types of products come into play. Like EGM has mentioned, they set up a platform where investors can, leverage on their platform and invest in derivatives. So we're seeing products come on gradually as investor awareness increases, and as also access to other global markets has also expanded. I think what is critical here is, how can we get more people to participate. And I think that's going to definitely take some time, because there is a cost of, making this product available to the masses. And I think technology has greatly helped to do that. But I do believe that in the next couple of months, we will see more financial services providers look at providing those services across various classes of investors and across various assets.
All right, I really have to end it here. So what I'm going to appeal to our panelists to do is if you can take a look at the Q&A field, some questions have been posed to specific people. For example, BT, I see that there's a question on how one can invest in the foreign market. Maybe you want to take that. And please, you can just type in your responses as we begin to round up. But before we do, I want Mr. Gwadabe to speak to an information service that I think the AppCon is providing. Do you want to speak to that very quickly? I believe it's called Niger BDCs. There is an app and also their website where people can get the latest foreign exchange rates. Very quickly, sir.
Yeah, AppCon as a self-regulatory organization and one of the most strategic partners in exchange rate management and stability. We have been partnering with Central Bank of Nigeria, and information is key. We found out that most apps that like abokifs.com are mostly speculative, while the official rate is doing about 395, 400. Abokifs will be cutting 470, 480. For all that is really not patriotic. So we have to come with a homegrown application that we at least show the relative exchange rate in the market. And two, it has over 4,500 licensed bureau de change attached to it, whereby you can link and see them, their contacts are there. So it's more robust. It gives you information about bureau de change in Nigeria and their location. And these are registered members of the association and also licensed by the Central Bank of Nigeria. So you can feel comfortable to at least call them, visit their office, considering a lot of unlicensed bureau de change that are operating within the market. So it's our own way of also adding value to the foreign exchange market. And also we're looking at innovation. So we want the Central Bank of Nigeria to really innovate some of our operations. India is having over $30 billion annually diaspora remittances. And this comes through the bureau de change. The whole of bank cashing need in Dubai is provided by the bureau de change. Lebanon also is the bureau de change activities that is even fueling their economy. So Nigeria stands to gain a lot with empowerment of the bureau de change subsector as we speak. Thank you.
All right. Well, thank you. So again, it's called Niger BDC. You can find it in the Apple Store and Google Play Store. You can get informed in real time, and it is being put together by the association, so you can trust the numbers and the figures that you would find on that platform. On that note, I really have to round things up. We have overrun quite a bit, but I think it has been a very interesting and useful conversation on the outlook for the Naira. I hope that you've learned a thing or two and you've been better informed on how you navigate 2021. So once again, I want to say a big thank you to our panelists. Of course, I want to say a big thank you to our sponsors, Quadros Capital, Eagle Global Markets, the Association of Bureau de Change Operators of Nigeria, and then of course our media partners, Web TV and Frontier Africa, who are also broadcasting this event live. On that note, I'd like to say thank you again for attending, and you should be getting some more information via email about how you can view this again if you would like, and of course some information as well from some of our sponsors. So again, I want to say thank you very much, and we look forward to having you at the next event. Thank you.
Thank you. Bye-bye.
Lovely to hear you all, by the way. That was really, really fun. And
yes, that was good. Thank you so much, Charles. It was great to have you.
No, pleasure. Take care, Wale. And
yeah, Charles.